The place where gearheads and policy hawks collide. May 30th, 2025. President Donald Trump dropped a tariff bombshell, doubling the existing 25% levy on imported steel and aluminum to a staggering 50%. Effective June 4th, this move was framed as a bold push to protect American industry and bring life back to struggling steel towns. But almost instantly, the shockwaves tore through the North American economic landscape, with Canada, America's closest ally and trusted metal supplier, thrust into the eye of a sudden trade hurricane. Prime Minister Mark Carney wasted no time firing back. His swift, calculated response signaled Canada was prepared to defend its industrial backbone and global trade credibility. Buckle up, because the road ahead is turbulent. Let's dive into the high-octane developments fueling this escalating standoff. If you found this video insightful, don't forget to hit that subscribe button. Stay tuned for more updates and content. We've got plenty more coming your way. 1. Revving up the trade war. Tariff thunder strikes North America. President Trump's decision to hike tariffs to 50% was sold as a national security measure designed to shield U.S. manufacturers from foreign competition. The White House pitch was simple: rebuild America's steel and aluminum capacity and give domestic plants the breathing room they desperately need. But the reality hit fast and hard. Canada produces roughly 15 billion Canadian dollars worth of steel annually, supporting more than 100,000 workers. Its aluminum sector is even more dependent on the American market, with nearly 94% of its production heading south. Suddenly, both industries found themselves staring down a devastating body blow. Catherine Cobden, head of the Canadian Steel Producers Association, quickly warned of catastrophic consequences. For Canadian mills, these tariffs weren't just a policy shift, they were an existential threat. Meanwhile, American industries weren't immune either. Automakers, heavy equipment builders, and construction giants rely heavily on affordable Canadian metals. With costs rising, companies began bracing for price hikes that could trickle down to consumers. From car lots to hardware stores, wallets across North America are now at risk of being squeezed. The trade engines that had long kept the continent running smoothly were suddenly sputtering. But Canada had no intention of sitting idle and neutral. To Canada's counterpunch, a bold retaliation. Blueprint Carney's government wasted no time unveiling a sharp countermeasure. A 25% tariff on U.S. steel and aluminum imports worth nearly 30 billion Canadian dollars. It was a message to Washington: Canada would not be pushed around. But Ottawa's strategy goes beyond tit-for-tat tariffs. Canada is seizing the moment to fast-track major infrastructure and energy projects that will anchor its economy for decades. From new pipelines and nuclear energy investments to expanded trade corridors across the Pacific, this is about resilience, not revenge. What makes this response unique is the focus on long-term independence. Ottawa is deliberately weaving closer ties to Asian markets, while ensuring environmental stewardship and Indigenous partnerships remain front and center. The signal is unmistakable. Canada's future won't hinge solely on U.S. demand. For the automotive world, these shifts could reconfigure supply chains in surprising ways. New trade lanes, fresh component flows, and diversified partnerships all point to an industrial map that looks very different from today's. The oil gambit, Canada's heavy crude horsepower. If metals were the opening salvo, oil is Canada's heavyweight card. As the world's fourth largest oil producer, Canada exports around 3.8 million barrels of crude every single day to the United States, worth over $130 billion annually. For many American refineries, particularly in the Midwest, this thick crude isn't just an option, it's essential. An outright ban on oil exports is unlikely. The two economies are too deeply interlocked. But Canada has hinted at redirecting flows overseas. Even a partial shift could spark fuel shortages and price spikes across the U.S., draining $30 to $35 billion from its economy each year. The message is subtle but powerful. Canada has leverage, and it's not afraid to flex it if the trade war escalates. 4. Shifting gears, the Trans-Mountain expansion. Nowhere is Canada's determination to diversify clearer than in the Trans-Mountain pipeline expansion. This massive project boosts capacity from 300,000 barrels per day to nearly 890,000, turbocharging Canada's access to Asia. The timing couldn't be better. In March 2025, China imported over 7 million barrels of Canadian crude through Pacific ports, making it one of Canada's top buyers. With India also in the mix, Canada is no longer a one-market energy player. For Canada's auto sector, this diversification is crucial. More export routes mean more stability, even if U.S. tariffs cause turbulence. At its core, this pipeline expansion is about freedom. Freedom to choose markets, freedom to safeguard industries, and freedom to chart a resilient economic future. The financial impact, counting the cost. Tariffs this steep don't just rattle headlines, they reshape economies. For Canadian manufacturers, the pain is immediate. Auto parts suppliers, steel producers, and aluminum fabricators are staring down restricted U.S. access. American manufacturers dependent on Canadian imports face rising production costs and potential shortages. Supply chains across North America function like a finely tuned engine. Remove one gear and the whole system grinds. For automakers, this could mean fewer parts, delayed assembly lines, and ultimately, higher prices at dealerships. Workers and consumers alike may bear the brunt. Yet Canada's proactive approach, investing in infrastructure, broadening trade corridors, and diversifying export markets, suggests it won't just weather the storm, it plans to come out stronger. Meanwhile, the U.S. enters its 2026 election cycle, where voters will likely judge whether protectionist policies deliver the promised revival or merely higher costs. Conclusion: what began as a tariff tweak has now exploded into a full-scale test of North America's economic endurance. Canada's counterpunch, tariffs, oil leverage, pipelines, and trade diversification. On the American side, Trump's 50% tariffs may backfire, with rising costs threatening to stall the very industries they were meant to protect. If you found this video insightful, don't forget to hit that subscribe button. Stay tuned for more updates and content. We've got plenty more coming your way.